All right, everybody, welcome back. Time to roll up our sleeves and really dig into some 2025 tax changes.
Buckle up, franchise owners. This is going to be a deep dive.
Yeah, that's right. We're going to look at how all these new IRS changes could hit your bottom line.
And don't worry, we're going to break it all down plain and simple.
We're ditching the jargon today, keeping it real.
You'll be ready to tackle those 2025 taxes like a pro.
All right, let's jump right in. First up, the standard deduction is going up.
Big time.
$15,000 for single filers.
And $30,000 for married couples filing jointly.
So think about it. Let's say you're a single franchise owner. You've got maybe 20 grand in deductible expenses.
In the past, you might have itemized those deductions.
But now, that standard deduction's so high.
Might make more sense to just take the standard route.
It all comes down to your individual situation, right?
Exactly. You got to crunch the numbers and see what works best for you.
This new standard deduction, though, it's a game changer.
Opens up a whole new world of strategy when it comes to deductions.
Okay, and speaking of strategy, let's talk about the marginal tax rate brackets.
Some adjustments there, too, for 2025.
Now we've got that 24% bracket starting at $103,350 for single filers.
And for those filing jointly, the 22% rate kicks in for income over $48,475.
So first things first, you got to figure out which bracket your franchise falls under.
Once you know that, then you can really start fine-tuning your tax plan.
And that's where the magic happens.
Yeah, absolutely. You can start exploring ways to potentially lower that tax liability.
All right, next up, this one's particularly juicy for franchise owners, the Earned Income Tax Credit.
The EITC. It's getting a nice little boost.
The maximum credit is now up to $8,046.
For families with 3 or more qualifying children.
This credit can make a huge difference for small businesses.
Especially those with a lot of part-time employees or even family members working for the business.
Definitely worth looking into how this credit could impact your overall tax picture.
It could really boost your bottom line, especially if you have those qualifying employees.
But how about we switch gears a little bit and talk employee benefits?
Fringe benefits and those flexible spending accounts.
FSAs.
Right. The monthly limit for those qualified transportation benefits is now up to $325.
And for health FSAs, it's a cool $3,300.
These benefits aren't just about making your employees happy, though.
No, they can actually lead to some pretty significant tax deductions for you as the franchise owner.
Everybody wins.
All right, so for those of you using medical savings accounts, MSAs.
We've got some news on that front, too.
Deductible limits have gone up for both self-only and family coverage.
This is exciting because it gives you some serious tax advantages.
And it makes healthcare more affordable.
For you and your employees.
It's all about finding that balance, right?
Exactly.
Last but not least, we got to talk about those gift and estate tax exclusions.
Big changes here.
The estate tax exclusion is now a whopping $13.99 million.
And that annual gift tax exclusion bumped up to $19,000.
Now, I know a lot of franchise owners, they pour their heart and soul into their businesses, hoping to pass them down one day.
These increased limits, they can be a real game changer when it comes to succession planning.
For sure, gives you some flexibility to maximize your estate planning strategy.
It's about making sure that transition is as smooth as possible for your business and for your family.
So as we wrap things up, let's take a minute to think big picture here.
What does all of this mean for you?
These changes, even the little ones, they can have a big impact.
Whether you're trying to lower your taxable income or you want to max out those deductions.
Or maybe you're thinking long-term planning for future growth.
You've got to make sure your tax strategy is in line with these 2025 changes.
It's all about being proactive.
Absolutely.
So here's something to chew on as you move forward. How might these tax changes affect your long-term business goals, especially when it comes to succession planning? Think about passing the torch, whether it's to family or to a future buyer. It's a big question.
One worth exploring.
And we're here to help you navigate it every step of the way.
All the way.
Thanks for joining us for this deep dive into the 2025 tax changes. Catch you next time.
See you then.